Okay, moving to the next topic, discretionary trusts and family structures, another big one. There's a lot of changes. What is the 30% minimum tax on discretionary trusts and when does it start?
Yeah, so this is one of the major changes from the budget. From 1 July 2028, trustees will pay 30% tax on trust income and beneficiaries will be provided with a non-refundable tax credit. So that means that the trustee will be paying tax on behalf of beneficiaries and they'll be able to provide a credit that they'll claim in their tax return, but it won't be able to generate a refund. So if their marginal tax rates are below 30%, there'll be an impact.
Okay. And how does this change affect income splitting strategies in family trusts?
Look, it is going to reduce flexibility quite a lot. Income can no longer be effectively taxed below 30% average rate, regardless of the beneficiary's marginal tax rate. It's going to impact a wide range of people, particularly in the small business end of trading, where we see traditionally a lot of discretionary trusts used.
And which trusts are exempt from the 30% minimum tax?
Yeah, there are a couple of exemptions. It is designed to apply to what we call a non-fixed trust or a discretionary trust. So exemptions would include fixed trusts, widely held trusts, all super funds, special disability trusts, deceased estates, charitable trusts, and testamentary trusts that are fixed, existing as at budget night.
And one that I've had lots of phone calls from clients about is what happens with corporate beneficiaries that are known as bucket companies.
Yeah, so there is quite a concern at the moment that double taxation will apply. It was indicated in the budget papers that was the case. It does seem a little bit unfair and run sort of counter to the way the imputation system's designed to work. That would mean that corporate beneficiaries may not receive a credit for the 30% trustee tax, or if they do, they won't receive a franking credit, which would otherwise enable them to release a franked dividend down to underlying shareholders.
So the way it currently reads in our understanding is double taxation effectively.
Essentially, yeah.
Okay. Should someone wind up their family trust before 28?
Look, I think the answer is that they should consider restructuring out of the arrangement depending on their circumstances. There is proposed to be a rollover relief that will be available from 1 July 2027 to 30 June 2030 that will allow for CGT-free restructuring. Of course, we're always nervous of any CGT rollovers because they are historically quite complicated, but we would be hoping that we would see a sort of wholesale, broad-based CGT rollover scheme.
Is there any adverse consequences that might come out of or as a result of the rollover?
Yeah, look, the main issue we would be concerned by is the fact that if the rollover doesn't apply, that CGT might be triggered at an earlier stage, and potentially in some circumstances that may be advantageous because it will enable a reset of cost base and taxation of the gain using the discount.
Okay. Is there any other taxes that we need to be conscious of?
Yeah, look, I'm very conscious of the fact that stamp duty is applicable. So certainly for any real property, any time we're transferring real property, stamp duty can apply. And in some states, there is still stamp duty on business assets that can apply as well, particularly WA and Queensland. So I think depending where you are, you want to make sure you get specific advice regarding stamp duty.
Definitely. Does the primary production income get the 30% minimum tax?
We understand at the moment there's going to be a farming exemption, which means that any primary production income, including capital gains, will be excluded from the new 30% minimum tax regime.
Okay. And is there anything on testamentary trust in this regard?
Yeah, look, it's at this stage mixed treatment. Existing testamentary trusts, so the trusts that are in existence from budget night, are going to be excluded from the measures, but newly created testamentary trusts are proposed to be affected, assuming that they are discretionary in nature. At the moment, there's a carve-out for fixed testamentary trusts. So that would mean that even if you have it documented in your will at the moment, on the basis that the test individual has not passed away, then they would potentially be at risk and may need to be adjusted.
Okay, so some work maybe to review your wills.
For estate planning, yeah. And look, we'd always encourage that. It's always good to make sure that your estate planning needs are up to date and tested out every probably couple of years.
Definitely. How many small businesses will be affected by the trust tax changes?
It's quite significant. Discretionary trusts are quite a common tool that are used in all businesses, really. There's around 350,000 active small businesses that operate through discretionary trusts.
Yeah.
Quite a lot.
It's a big impact.
Yeah, absolutely.
What happens to beneficiaries whose tax rate is below the 30%?
Yeah, this is where the really bites in. There's not going to be a refund of that withholding tax. So there will be a minimum rate of 30% applied, taxed at the trustee level, and any excess tax is not refundable if their marginal tax rate is lower. This means that it's probably going to impact a lot of smaller businesses more than it would larger businesses. A family that's splitting income of, say, $120,000, splitting $60,000 between two individuals, they're the ones that will carry the most burden here in terms of the change in tax rates.
Okay, and moving along, how does this, if we know, interact with Division 7A and private company rules?
Yeah, look, in one respect, it's going to add a layer of complexity. We'll need to really carefully consider the interaction with existing anti-avoidance rules in regard to restructuring. What we will probably see with respect to bucket companies is a reduction, and that seems to be the main area the ATO were concerned by and the mischief they were trying to address. These rules are going to really change the landscape in that respect.
And a question without notice, do you think this will help alleviate the ATO with professional services income in that it has already got the minimum tax at 30%?
Yeah, I mean, it would seem from the change that's going to apply, that minimum 30% is going to lead to a lot of professional services taxpayers that maybe previously were operating on a green, orange and red scheme are probably going to start dropping down and fall out of the red scheme. So, look, it's going to be really interesting to see what happens there. Yeah.
Sorry, everyone. Can I still use a trust for asset protection purposes?
Yeah, look, this is one of the challenging things that we find. We use discretionary trusts for more reasons than just tax minimisation. Discretionary trusts are used very specifically for asset protection. And so I think there is still a case there to use them in certain circumstances. It's just that it's going to be far less tax effective, particularly where there's maybe income splitting involved or a broad pool of beneficiaries that you're distributing to.
Okay. Is there any good news for small businesses in this budget?
Look, there are a couple of positive measures. They have finally announced that they are locking in the $20,000 instant asset write-off, so that it's a permanent change, which is a big relief. It tends to be one of those measures that the government announces as a benefit each and every budget,
yes,
which is much the same year in, year out. So a permanent announcement and permanent change here is a welcome relief. There's also going to be the restoration of the loss carryback rules that will enable a trading company to apply tax losses that are incurred in a year to income that was earned in previous years. We'll cover that in more detail. And there's been some changes around the R&D incentive that will make that concession a little bit more available and favourable.
Okay. Well, getting into the level of detail, what are the loss carryback rules and how can one benefit from them?
Yeah, so it's going to be a cash flow boost to companies where they have turnover less than $1 billion. Mm-hmm. And it's going to enable them to carry back tax losses to offset tax paid in the previous 2 years from 2026 to 2027 financial year.
So next financial year.
Next financial year, yeah.
What are the new startup loss refund rules?
Yeah, this is a slightly different set of rules designed to really support startups and eligible startups that have turnover less than $10 million will be able to access a refundable tax offset for losses in the first 2 years. This offset is going to be capped at the amount of FBT and PYG withholding that's been paid and will apply for the 2028-2029 financial year.
Okay, so we've got a lot of dates that we've got to keep in mind.
We do, yeah. This concession is quite a bit further into the future. And it's really, because of the structure of that concession, is going to be focused around employment for startup entities.
And are there any changes to the company tax rate?
unfortunately no changes. The company tax rate will remain unchanged, and they're really focusing in on these incentives and other integrity measures.
Okay, so speaking of which, what's changing with the R&D tax incentive?
Yeah, they're reforming that incentive. So the core R&D offset rate is going to increase 4.5 percentage points to a flat 50%. And the refundable offset is going to be extended to businesses with turnover greater up to $50 million.
Okay.
And under 10 years old. Yeah.
Okay.
More complexity. Lots of thresholds to remember.
Dates and thresholds.
Yeah.